Grains were all higher on Friday after the WASDE report. Chip Nellinger, Blue Reef Agri-Marketing is with us. Okay, Chip, it wasn't like a super bullish report, constructive for corn, but we rallied across the board. And was that weather, fund short covering? What was it?
Yeah, I think it's a combination. I think first and foremost, corn sold off going into the reports on some fears that carryout would be bigger than expected. At the same time, wheat rallied sharply for 2 days. So, corn had a little catching up to do with the wheat rally. It ended up not being as bearish as the market had thought on corn. And then there's a weather component to it as well. Obviously, we are behind pace on planting. We've got a potential window of a few days coming up here, more rain forecast next week. And so it still is a weather issue, both here for planting and in Russia on their wheat. But at the end of the day, I think it's to your point earlier in the question, it's fund short covering, it's money flow that's really driving us more than fundamentals right now.
So, Chip, 2 years of back-to-back 2 billion bushel carryout on corn. Does that warrant us being this close to $5?
Well, it likely doesn't, but the case is, are we going to raise 181? And that's trend line. I realize, but we've never raised 181 bushel corn crop ever. In fact, if you take the last 5 years average, we would be more in the 175 range. So if you plug a 175 yield in there, all of a sudden our carryout's down towards 1.4 billion, and that does support $5 plus corn. So I think we're right on that fence of what's the ultimate yield going to be. How are we going to get the rest of the crop in the ground? If we do raise that eventually this coming fall, and we're swamped with 181 bushel yield, then we do not support anything near $5. But I think between now and then is the question about can we raise 181 bushel yield, which we've never done before, even though it's on paper trend line.
So USDA did pull down Brazilian corn production and Argentinian corn production, a combined 4 million metric tons, but they have a ways to go to get down to where CONAB is at, right?
Yeah, for sure. And that's been a big sticking point in the market's mind is USDA is just, several hundred million bushels above where both CONAB has been and some of the private estimates out of Argentina on their crop sizes. So USDA is coming down a little bit. We get CONAB, early this week, and that'll give us a little better feel for, what if that crop is stabilized in their opinion or continuing to shrink. So there's still some questions there. The recent flooding in the southern part of Brazil adds to the questions as to how many, beans that were still left in the field may have been lost to the flooding. And so there's still some questions there that could drive us in the short run here. It might take another couple months to figure out the ultimate size of the South American crop.
Yeah, USDA really didn't do much again with the Brazilian production numbers on soybeans and or Argentina really. But let's talk about the US numbers. Record yield, we've got record production, but a 445 million bushel ending stocks figure. Does that concern you? Does it warrant us being at $12 or above for price?
Well, it probably doesn't eventually, and that's always the hard part to gauge. I think we were given a big gift because the USDA, you look at total demand for new crop beans, 246 million bushels larger than the old crop. And I'm not so sure that they won't have to cut the old crop a little bit before it's said and done. So I think we're given a little bit of a gift there with the big demand number the USDA gave us. Does it warrant $12 beans? Not eventually. If we can get them planted and we don't run into any production problems or hot, dry weather in July and August, then that carry out at 400 plus million does not warrant $12 plus beans. The question is, how are we going to get the planting, progress kicked off? Are we going to get the beans in the ground timely? And do we run into any hot, dry weather in July or August? But at face value, if we end up with 400 million bushel carry out, certainly does not warrant $12 plus beans. And I'm not so sure at the end of the day that we won't be up towards 500-600 million because the USDA gave us a gift on the demand today.
They did, and soybeans basically followed both corn and wheat then today.
I think soybeans are a follower now, and the funds certainly still likely have some more shorts to get out of. Maybe they'll build a net long, but to me, the bean market is certainly a follower now. It's going to be all about wheat in the short run. That's going to drag corn along with it, and beans will come kicking and screaming because fundamentally, with this carryout figure, probably doesn't support a whole lot north of $12 until and unless we get some sort of weather scare this summer.
Yeah. So what about the wheat market? Domestically, we did see production and ending stocks over a year ago, although both were below expectations. But again, Was the market even trading that today?
I don't know that they're trading. I think they're trading some potential production problems in Russia. They've had awful dry weather over there. They've had some freeze potential. I even saw on Twitter that they had a snow earlier this week in Moscow. So they have had some unusual weather in some of the wheat producing areas of Russia, and fears that that crop is shrinking. USDA actually confirmed that, on their report Friday, that we did see Russian production shrinking. I think it's all about money flow. The funds have been short the wheat market essentially for 2 years. They've made good money and they're getting out. And whether the production issue continues in Russia or even Oklahoma and Kansas here, I think is a little bit secondary until the funds get out of what they want out of and exit their shorts and maybe build up a small net long position. I think the wheat market still has some room to the upside. And we're actually approaching some levels that, if you get up over 666, 667 in the July Chicago on a closing basis, it could ignite a whole nother round of fund buying that maybe could push us up and challenge $7. Obviously, if it starts raining in Russia, in the next week or 10 days, that's going to go and cap us a lot. So still a little bit of a weather issue as well.
Yeah, but all three classes are above the 200-day moving averages. And if you look at the algos, do you think, they've been covering shorts? Are they maybe flat at this point? I mean, how much have they covered? Do we know?
Yeah, that's always the question. You always have a delay on the commitment of traders. There's a several day lag when it comes out. Typically, historically, as you look at the data over the last 15, 16 years, corn, beans, and wheat, all three, during the growing season, the funds typically hold a long position at some point in time. And usually they don't go from a net short in a large amount just back to even and then back short again. They usually flip the other way and go long. So it wouldn't shock me eventually that in wheat especially, and maybe even corn, maybe to a lesser extent beans because it's a follower, that we don't see the funds ultimately build up a net long position here over the next 3 or 4 weeks.
But we always say it's always more the reaction that we get to a report than the report itself. So the fact that we were higher on the close, I think, speaks volumes here for this market.
Yeah, and I don't want to give people the impression that it's just all bullish and we're going straight up. I think
Right.
for a producer, you've got opportunities knocking on the door right now. Some of the highest levels we've seen in many, many months. So from an old crop standpoint, I continue to be a seller. From a new crop, corn, beans, and wheat, and maybe even some 25 wheat, I think you're looking at an opportunity as these funds push out of their shorts. It's the opportunity we've been waiting for. So don't lose sight of that fact from a producer standpoint.
And if planting pace picks back up and the funds see that, that could bring them maybe to a little bit of a screeching halt or not.
Yeah, absolutely. I mean, there is some fundamental reasoning behind this. It's not just all, technicals. That's a large part of it. And the funds sometimes, irregardless of what the fundamentals say, when their algorithms and trading models tell them to get in or out, they do it no matter what the fundamentals say. But
Yeah.
if we see planting pick up pace, if we see some clear weather in the last half of May, that certainly will go a long way at capping any rally that you have in the short run.
What about this cattle market? So I get feeders being mostly lower because of the higher corn. Live cattle continue to try to bounce, but we really have a lack of confidence in that market, don't we?
I think there's a big lack of confidence, and probably rightfully so. I think I'm not trying to compare it to mad cow. I think it's totally different, but it's somewhat the same because it's such an unknown. And traders in the cattle market that have been there a long time, they remember mad cow, this avian flu issue. I think the numbers tell you that we should be at a higher level in cattle, but you're not seeing the open interest. You're not seeing the speculative links, and rightfully so, because you could wake up any morning, see a news item out overnight about the avian flu or contaminating U.S. meat or whatever it might be, and be faced with multiple limit down days potentially. So I think the open interest is pulling out of that market with the uncertainty. But fundamentally, the cash market looks pretty strong. The numbers don't look like they're there, and you can build an argument that the cash market itself will drag the June futures higher. But right now, it doesn't seem like the funds want to be as involved as they did 6 months ago in the cattle market.
That is for sure. All right. Thanks for joining us. That is Chip Nellinger, Blue Reef Agri-Marketing. That is Markets Now.